Time for JesterEngine.com's Daily Tech Rundown. Quick headline to kick us off. A 7,000-word report from a research shop went viral this week, predicting a 2028 AI-driven economic collapse. Markets jittered, IBM sold off, and commentators called it a doomsday scenario.
Right. That Citrini Research note spread fast, and traders repriced risk. You saw sharp volatility, some dramatic one-day moves, and a lot of sensational takeaways on TV.
Why did a single report move markets so much? Is this a new sensitivity or just classic fear amplified by social media?
A bit of both. Markets always react to narrative, but social platforms speed amplification. When a worst-case scenario lands alongside existing AI anxieties, it becomes a self-fulfilling shock. Investors sell first and ask questions later. The real issue is confidence. Markets are fragile when expectations about growth and jobs are uncertain.
Economists pushed back, saying the timeline is overstated and policy matters more. What's the practical takeaway for regulators and firms?
Calmer, evidence-based analysis. Policy choices on retraining, income support, and firm incentives will shape outcomes far more than a single deterministic forecast. Firms should stress test scenarios, and policymakers should focus on active labor policies and measured regulation, not panic.
So don't burn down the data center yet, just plan better.
Exactly. Panic is costly, planning is productive.
Next up, Meta agreed to buy up to 6 gigawatts of AMD Instinct MI450 chips in a multi-year pact that can convert into equity, potentially giving Meta up to about 10% of AMD. Numbers reported range from roughly $60 billion to as high as $100 billion.
It's enormous and strategic. Meta gets capacity for AI workloads, while AMD gets a deeply committed customer, and potentially new capital through share issuance as shipments vest. It's similar to AMD's arrangement with OpenAI last year.
Isn't there a worry about circular financing and dependency? Chip for stock sounds clever, but risky.
Absolutely. Those deals can align incentives, but also create entanglement. If AI demand softens, both chip revenue and the value of equity considerations can drop, magnifying losses. For AMD, it's a growth play to win hyperscaler business, but it dilutes independence and ties future fortunes to a few big partners.
What about competition with NVIDIA? Is Meta signaling diversification?
Yes, Meta wants choice in its stack. Buying AMD chips complements NVIDIA commitments and pressures the market toward multi-vendor architectures. For investors, it's an inflection point. Bullish for AMD in the short run, but something to underwrite carefully.
Anthropic expanded Claude Cowork with connectors and plugins into Google Workspace, DocuSign, and now Microsoft Excel and PowerPoint. They're pushing Claude from a developer tool into the productivity layer.
That move is deliberate. Embed the model into everyday workflows so firms use Claude as a glue for document drafting, slide generation, and automation. Pre-built industry connectors make adoption faster, and that spooked investors who fear knowledge work automation.
Practical question. Can this actually replace knowledge workers, or is it a force multiplier?
Largely a force multiplier. Claude can automate rote synthesis, draft memos, and crunch spreadsheets, but context, judgment, responsibility, and real-time security remain human domains. There are also governance issues. Plugins increase integration risk and data leakage concerns, so enterprises need strict access controls and auditing.
So tech teams get new helpers, but also new work making sure they don't cause a data breach.
Exactly. Adoption with guardrails is the sensible path.
Switching gears to regulation, UK authorities fined a porn site £1.35 million under the Online Safety Act, and the ICO fined Reddit about $14.5 million for processing children's data improperly.
Those are significant enforcement signals. Ofcom used the Online Safety Act to penalize weak age verification, and the ICO called Reddit's prior sign-up practices easy to bypass, noting many under 13 accounts with no lawful basis for processing.
Reddit says demanding more identity info is counter to privacy. How do regulators square child safety with privacy protections?
It's a hard balance. Stronger age verification reduces harm but can require more personal data, which raises privacy and surveillance concerns. Regulators want platforms to show they've designed systems that either avoid collecting unnecessary identity data or use privacy-preserving verification methods. The appeal process will be interesting and could shape global norms.
So we'll be watching for tech solutions that verify age without hoovering identities.
Exactly. Cryptographic age proofs, attestations, or trusted third-party checks may become mainstream.
Last story. Apple confirmed Foxconn will begin assembling some Mac Mini units at a new Houston facility later this year, alongside AI server work and an advanced manufacturing center.
It's a pragmatic move. Localize low-volume, high-value assembly for the U.S. market, build training capacity, and show progress on Apple's large U.S. investment pledge. Mac Mini makes sense because it's a small proportion of global Mac sales and easier to shift stateside.
Is this mostly political theater to avoid tariffs, or a meaningful change in supply chain strategy?
Both. It hedges political risk and tariffs, but it also signals a long game. Manufacturers are rethinking geographic concentration. That said, high-volume products will likely stay in Asia because of scale and supplier ecosystems. The Houston site is meaningful for jobs and skills training, but don't expect mass reshoring of iPhones overnight.
So, selective onshoring. Interesting. Thanks for walking through the week.
My pleasure. Same time next week for the next avalanche of tech headlines. The preceding audio summary was created at jesterengine.com, where you can find and verify the original sources.